Hello and welcome, everybody. I am Sarah Snell Cooke, your host here at the Credit Union Connection, and I am here with Becky Reed. Welcome.
Hey, Sarah. Mm.
Oh gosh, it is so exciting to see you here today because we're going to focus. I mean, AI has kind of shifted the focus, but now we're going back. We're going back to blockchain distributed ledger technology with the legislation that's been moving through Washington. But first, Becky, why don't you talk a little bit about your role there at BankSocial and what you've been doing?
All right. So today I am the Chief Operating Officer at BankSocial. We are a fintech that is also a CUSO. So we're owned by credit unions and we serve credit unions, also community financial institutions, which otherwise known as banks, right? For financial services. And we do a lot in the blockchain sector. We have a digital asset exchange, we have a stable coin, which is kind of what we're going to be talking about today. But we're a payments platform, basically, for both traditional payment tech as well as emerging payment tech. And of course, my almost 30-year history prior to coming to BankSocial was in the credit union space, and I'm a former credit union CEO.
Yeah, and so what attracted you to become or just to dig so deep into the whole Bitcoin blockchain tech coming
Yeah.
from being a credit union
Yeah.
executive?
Well, about 2015, 2016 timeframe, I was doing a lot of work with Pure IT, which is a QSO that I co-founded whenever I was at Lone Star. And we were doing a lot of network remediation and a lot of cloud networking stuff. And I came upon blockchain. And what I learned about blockchain, which I really couldn't have cared less about Bitcoin, to be honest, but blockchain fascinated me because it was a decentralized network. And so I really started doing a bunch of research on that and figuring out, well, what the heck really is this thing? And once I learned about Bitcoin, while I didn't care about it from an investment perspective, when I looked at all the other cryptocurrencies that were available at that time too, on Ethereum in particular, I was like, wow, this looks like a new payment network. This is
Mm.
going to completely disrupt payments in the financial services area. And so that's really what started it. And I've continued to stay interested and stay curious and learn more about it as it grew and matured and evolved. And what I thought is actually coming true. It is absolutely already disrupting traditional payment systems.
Yeah, and so currently we have the Genius Act going through Congress right now. What is that? How's that, is that going to have an impact on the general Bitcoin, the stable coin? Well, explain the difference first for me. Uh,
Okay,
Stable
great.
and Bitcoin. Yeah.
No, that's absolutely a great question. So cryptocurrency, crypto in the front of that word actually stands for cryptography. So cryptography is the underlying encryption methodology that is used to securitize transactions that happen on a blockchain or a distributed ledger network. So a DLT is just kind of a generic name for that technology. Blockchain is a type of DLT.
Right.
Okay. And blockchain is most notably connected to Bitcoin. So Bitcoin was created in around 2009 to really be a new form of self-custodial money, meaning that it's something that I own and that I can hold without the influence or requirement of a bank, a third-party bank. Now, that's not what it is today. Today, it's really a commodity. It's kind of used as a hedge for inflation, similar to gold or precious metals, things of that nature. Commodities are also things like, corn and barley and, butter and things like
Pork
that.
futures. Yeah.
Yeah, yeah, right. All of that stuff. Right. So that part of it is kind of familiar, but it's digitally native, right? It was created, it was born, and it lives in 100% digital environment that requires the internet to
Hmm.
access. So Bitcoin and other types of cryptocurrencies are pretty much the transaction process, how transactions happen on a blockchain or a distributed ledger. So think of it as kind of being the car on the highway, right? And a distributed ledger is just a database that stores information. All the blockchain is a bunch of transaction data that is stored in a block-like fashion. That's
Mm-hmm.
really all it is. So the difference between something like Bitcoin, which most people are familiar with, and a stable coin is that Bitcoin doesn't make a lot of sense for a payment or any type of cryptocurrency that's volatile because of that. You probably wouldn't want to use your Tesla stock to pay for your coffee at Starbucks. Well, it's the same exact kind of thing. The difference, of course, with a digital asset is the volatility is even greater than what you would see on the stock market most of the time. So using something like that is probably, you gold. You probably don't want to walk in and pay for your coffee with gold. It just doesn't make a lot of sense, right? That's not why you bought it. That's not why you're using it. You're not wanting to use it as a payment mechanism. And because of the time it takes to settle and the volatility, there's no guarantee that it will be the same value at the end of the transaction that it was at the beginning. So cryptocurrency that's volatile doesn't make a lot of sense for payments. So enter stablecoin. Stablecoin are backed by a fiat currency. What we're going to talk about today is backed by United States currency or USD, US dollars. And the Genius Act is a legislative um, bill that the Senate has passed that regulates what stablecoins are, what they can do, who can issue them, how they can be used, who regulates them, all of that kind of framework, because that really doesn't exist today. But in the Genius Act, it mentions a stablecoin as a payment token. So it's supposed to be used for payments because it's a representative and it's backed by one to one a US dollar. So
Okay.
it makes perfect sense to pay for your coffee with that because to the end consumer, it feels just like spending money on their debit card.
Right. Right. And so what does it mean for digital currency and its proponents, in particular within the credit union movement?
So, financial institutions, credit unions included, what we really do every single day is move money on behalf of our members. That's what we do.
Yep.
Now, you might say, well, but we do loans. Well, that's moving money. We're giving the member a loan so that they can go give that money to somebody else, right? To buy a car or whatever it is, a house. So, buy now, pay later. Well, that's moving money. That's a loan. Uh, you know, Debit card transactions, that's moving money. Everything that we do is moving money. And so we need to pay attention to this as credit unions because stablecoins are a new payment rail. And the existing payment rails that we use today are siloed, they're fragmented, they're antiquated, they're clunky, and they're expensive to run from a back office perspective. And because I've worked in a financial institution, I know firsthand how painful it is to deal with payments. It's expensive. It's just not a great experience. And everybody right now is experiencing astronomical fraud as it relates to payments. I mean, it is just off the charts. And so here we come with this new technology, this stablecoin technology that has capabilities that are not available in traditional payment systems that can help reduce fraud. And it's cheaper, it's faster, it's more secure, it's all of those things. And globally, $4.1 million in stablecoin transaction volume over the last 30 days.
Mm.
That is double the asset size of the entire ecosystem of credit unions here in the United States in 1 month. Now, you might say, who in the heck is using stablecoins? Everybody else outside of America is using stablecoins.
Huh.
So here in the United States, people are like, well, why is this such a big deal? Why would we even use a stablecoin? Well, the people here in the United States trust the banks. A lot of
Mm.
other countries, they don't. We have a US dollar that isn't volatile, that's
Mhm.
not going all over the place, that some dictator can come into office tomorrow and decide is worthless. So lots of other people in other countries, particularly developing countries, are using a US dollar backed stablecoin in order
Hmm.
to hold their wealth and to keep a stable value in their money. And so this absolutely 100% is going to change everything.
And are credit unions ready for that?
No. No, they absolutely aren't. I would say that probably 99% of credit unions in the United States are not connected to distributed ledger rails. And that's something that needs to be on the priority list for planning for 2026. What is your plan to get connected to those rails? Now, you don't have to go from 0 to 100. You can start small, but getting connected to those rails so your members can use stablecoins for payments is going to be something that's important. I don't know if you saw the news yesterday, but guess what? Fiserv, they're a payments
I
company,
saw.
right? Fiserv starting a payment token, right? A
Right, right.
stablecoin rail that they're going to start using. So don't you think that Fiserv would want to make that stablecoin rail available to credit unions? Yes, absolutely. So you need to be ready in your digital banking, in your members' experience, their home banking experience. They need to be able to interact with the space. And what that probably means is you're going to need to let them buy crypto. Because
Mm,
at the end of the day, that's what stablecoin is. It's a stable value cryptocurrency.
okay. And so what's so difficult for credit union boards, executives to get past with it?
I would say that when I go out and I talk to boards, and we provide at BankSocial, we provide free education to boards around stablecoins, faster payments, really. We're talking about an evolution in payments. So that includes things like RTP, FedNow, which while those might be more traditional types of payment rails, it's still something that is not going to go away in the next year. It will live in conjunction with the digital asset rails, and it will probably be interoperable. You know, things will move back and forth on different networks. Similarly to how some things move today, not exactly, but I what I don't find is that these credit union boards are confused about what payments are. They know what they are.
Right, right.
So when you talk about a digital token that's backed by a US dollar that's traveling on a distributed ledger to at the end from a consumer to a merchant, for example, everybody understands that. That's not hard to understand. Where we sometimes get into murky waters is the whole cryptocurrency
Hmm.
conversation. Because it's like, wait a minute, isn't cryptocurrency, isn't that bad for the environment? Well, no, you're talking about Bitcoin. That's not what this is. So then they go, well, but it's not safe. The bad guys use cryptocurrency all the time. Yeah, but they also use cash.
Yeah.
So once you can kind of get over some of those things, what I have found is everybody gets the payments. And I hear all the time, they're like, oh, are you only talking to, young boards or boards that are really forward thinking and innovative? No, no. Everybody understands what we do as a financial institution. We just provide payment services to our members. So it hasn't been really, honestly, a tough hurdle to get over. Everyone gets it.
Right. So what about implementing it? What sorts of things you said you can start small? What sorts of things can credit unions do to start small with stablecoin
Well, the first thing you need to do is you need to use it. So
personally?
download a digital asset wallet. You can download ours, banksocial.io. You can go to the App Store and see the BankSocial app. We have a stablecoin in there that you can buy. It's called RUSD. You don't have to use ours, but you can go to Coinbase. You can buy USDC. Um, download a digital asset wallet and buy some cryptocurrency. You don't have to spend a lot of money, $5, $10. I mean, it doesn't cost that much to do it, but start using it. And then, Sarah, I'm going to send some to you. and you're going to send it back to me. Once you start using it, then it's the mysticism is out of the equation, right? You're like, oh, this feels a lot like a P2P transaction, but it's way, way, way better and way faster. I
Mm-hmm.
can tell you that my eyes were opened the first time I received money in my digital wallet. I was like, wait, it's 8 o'clock at night on a Friday, and I just got money from you? Whoa, this is like blowing my mind. And so use it, start using it. That's it. Just start using it. That doesn't require an investment from the credit union at all. Just start using it, because if you're trying to implement something you never use, well, that's just silly. So
Mm-hmm.
start using it. Then in your planning sessions this year, as you're starting to going into your planning sessions, craft a plan for getting your members on chain. They need to be able to have access to cryptocurrency rails so they can buy, sell, send, and receive crypto, including stablecoins, or maybe just stablecoins. So go out there, vet different vendors. There are CUSOs that are doing this. Certainly BankSocial is one of those, but there are others. And the Genius Act actually allows CUSOs to be a stablecoin issuer.
Mm-hmm. So,
So,
oh, go ahead.
yep, go ahead.
One of the things you talked about it being a stablecoin issuer and Fiserv starting their own chain. Like anybody can kind of just start up a cryptocurrency.
No,
No, okay.
no. The Genius Act provides the framework
I see.
by
Okay.
which you can become a stablecoin issue. So if you think about it, similar to other types of entities that process money or do something here in the United States that has to do with lending or anything financial, you're going to have to register, you're going to have to be licensed, you're going to have to be regulated. So a lot of the stablecoin, the Genius Act actually is about that, what
Mm-hmm.
the regulatory framework is, what the auditing is, what kinds of things can back a stablecoin. And pretty much it's a US dollar sitting in a bank account, or it is a US Treasury.
Okay.
Those two things are pretty much the only things. It talks about the auditing that has to take place to verify that the funds that are backing the token are actually there. So all of that stuff is there, but no, it is not just anybody. Tomorrow can just, it's different than like when the internet first came out, right? Anybody who wanted to have a website could have a website. That's not the case here.
Right. Okay. And so how is it different from Zelle or some other immediate payment system?
Well, Zelle uses mostly the FedNow or the RTP rails,
Mm-hmm.
and sometimes they'll use ACH, but Zelle is using traditional payment rails. And
Okay.
Zelle was formed by a consortium of banks
Right.
who created kind of their own little network. And how it started to begin with was only people who were in that bank network could do P2P payments. So it was a very closed system. And if you didn't belong to that, then you couldn't participate in Zelle. Now it's expanded since then. And there's been partners that credit unions can work with to have access to that Zelle network. But Zelle is using traditional payment rails. And so
Okay.
they're not taking advantage of the fraud and risk mitigation functionality of a blockchain or a distributed ledger. So they're using traditional payment rails.
Can you go a little deeper into the fraud part? That's what I was going to talk about next or ask about next.
Yeah. So because distributed ledgers are digitally native and the tokens that ride on a distributed ledger are programmable. And so when you think about that, there is a type of program that you can use for a transaction token, right? Now, that transaction token can be a payment token like a stable coin. It could be a Bitcoin type of thing, although you can't do smart contracts with Bitcoin. But it could be, Ethereum or HBAR or XRP. And so those kinds of things can have programs that are written within them that can do all sorts of things. So it can, for example, hold a KYC. So now I can wrap a smart contract around, let's say, $5,000, and I can say only the person who matches this KYC can ever transact this money. Well, you can't do that with regular money today. So
Right.
that
Yeah.
makes that transaction a lot more secure. Or you can say, only this is going to you, Sarah. Only you can ever do anything with it. So only Sarah, who has KYC'd and proven that it is Sarah, can ever do a transaction or even receive that. So that's one thing that can also happen.
So
Also,
KYC being know your customer, right?
right,
I
yes,
just want to make
KYC,
sure
right,
everybody
know
knows.
your
Yeah.
customer, right. It's the Bank Secrecy Act, customer information protection
Yep.
um, that you have to do. CIP, customer information, yeah, program. CIP is
Yep.
customer information program. Sorry, and then know your customer is KYC. So that's required by U.S. laws, right? That you have to know who you're doing business with for anti-money laundering,
Mm-hmm.
capabilities. So all of that can happen in a smart contract in a digitally native token. Also, something that amazed me was every transaction on chain is transparent if you have the information if you know where to look, if you basically have the wallet address or the transaction ID, you can go in and you can look at a transaction. You can also see forwards and backwards wherever a certain token has gone, as long as you have the information in order to be able to trace it. So we at BankSocial use a tool called Chainalysis, and we can actually scan a wallet and we can see what has interacted with that wallet forward and backward to infinity. So now let's take that Zelle transaction that we just talked about, where I'm sending you money.
Mm-hmm.
I put in your email address or whatever, and that money goes into your bank account in some kind of real-time payment way usually. Okay. When I do that, when I enter your information to send you the money to, the Zelle or the financial institution or you has zero visibility into, is that a scammer?
Right.
Is that a bad place? Is that person doing bad things?
I
Well,
typed it with my handle last week and screwed something up. Yeah.
right. So you don't know. You have
Mhm.
no idea. And the bank doesn't know either. Zelle doesn't know. Well, on a distributed ledger, we do know. So
Mm.
before you even send that money, we can scan that wallet and we can go, that wallet was just opened like 5 seconds ago. It's brand spanking new. It's never had any transaction in it. Were you aware of that? Are you still good with sending this transaction, or is that outside of what you expected?
Mm.
And so we can prompt the member in digital banking, right? And during that payment process to just go, hey, you might want to just stop for just a minute and take it and just think about this transaction. That's not, we can't do that today. We can
Right.
also stop the transaction. Oh, it's going to an OFAC sanctioned wallet. Nope, not
Mm.
sending it, not happening. And so that kind of capability and using AI to monitor these things in real time and consume loads and loads of transaction information to try to see, is this transaction outside of what the member would normally do? All that capability is available on a distributed ledger that is 100% not available today in traditional payment systems.
And it seems, I mean, just the cost in the decrease of fraud, hopefully, that would be expected alone would be worthwhile
Oh, oh
investing.
my gosh. Yeah, and to be honest, we ain't seen nothing yet. I mean, the capability that we have, there's a lot of tools that just aren't built yet because this is just so new.
Mhm.
But I mean, even in 3 years from now, it's going to be probably 1,000 times more robust than it even is today because people will be building tools on chain as people start using it more for things outside of what I would consider gambling money, right? Which is what a lot of people do with cryptocurrency today. They buy something hoping to make a bunch of money, right? When they sell it, very speculative kind of thing. I wouldn't even call it investing personally. It's gambling, right? Uh, that, you roll the dice and it's going to go down or go up, and, maybe you make money or maybe you don't. But when we're
Mhm.
talking about stable coins and payment tokens and things like that, that's a completely different environment. And there will 100%, there already are folks that will be building tools for financial institutions to make that fraud and risk mitigation more robust.
And so what happens when you're sending me money on the chain, and just remind me of on the line from that
On
movie.
chain. It's called on chain.
On
You
chain.
can take the out.
Right.
Yeah.
And so how do I get it? Like, you're sending it to me and you're sending it to me, but how do I get it?
All right. So the way that it works is I say, hey, Sarah, and I owe you $5 for the pizza that we had last night, right? And I'm going to send you some stablecoin, some Rivia stablecoin, right? You go, great. I'll take your Rivia. And so we both open up our digital asset wallet app. It's an app.
Mm-hmm.
And I say, send $5 in Rivia. And you say, receive Rivia. And it gives a QR code.
Okay.
There's a QR code for your wallet. I scan your QR code. $5 is now in your wallet.
Hmm. Cool. Very simple.
Very simple. That's why I'm saying people, you need to use it. Just
Right.
use it,
Right.
because then it makes perfect sense. You're like, oh, okay, that's how it works. Now, in a merchant transaction, exactly the same thing.
Mm-hmm.
Walk up at a point of sale, similar to tap to pay. You scan the QR code, bam, you just paid for your coffee.
So, mm-hmm. Um, so what's next? What's next for credit unions and stablecoin?
Well, we're going to see, I think, a huge increase in different stablecoin issuers, different stablecoin providers. They're going to be popping up all over the place. We're already seeing it, right? With Fiserv. I think that probably the Visa and MasterCard networks will be coming out with something. I think JP Morgan has already done some things around stablecoin, because everybody wants to try to own the space, because you can make money with issuing a stablecoin, similar to the way you make money as Visa and MasterCard, right? Similar to interchange. There are transaction fees. Now, they are much, much less in general than what you experience with traditional rails today for the most part. Um, but I would say they're more akin to an ACH uh, cost. So I think an ACH cost a credit union, a penny or something. Real-time payment costs about 4 cents. It's less than that. Sometimes it's sub pennies for each transaction, but with volume, you can make money doing that. And then you can make money with the US Treasuries and the dollars that are backing it, as long as it's a permissible, thing that you're able to do while holding it. You can't
Okay.
go invest it in Tesla stock, for example. The stablecoin issuer can't do that. So for credit unions, uh, in what's next is, again, you need to get ready for
Mm-hmm.
and you need to understand enough about it to understand what is the noise and what's not. So there's going to be like probably 1,000 different stable coins, and behind the scenes, they're all going to be moving back and forth between each other. So the JP Morgan is going to go to the Fiserv stable coin, that's going to go to the credit union stable coin, and then it's going to end up at the member. Now that'll all happen simultaneously, a bunch of ledger moves in the back. But I think what we're going to see is explosion, and then we'll see consolidation.
Hmm.
The winners will come out,
When
and
you
there'll be 4 or 5, maybe more, but I do not believe there's going to be one.
So you're talking about the stable coin itself, is
Right.
consolidation of that, not credit unions.
Not credit unions.
Right, right,
Right.
right.
I'm talking about what credit unions can expect is there's going to be 5,000 different stablecoin options. And so they're going to need to figure out how they're going to deal with that when their members, what their members are going to use. And now my suggestion is, in my opinion, don't know how everything is going to play out in the future, but credit unions will probably have, this is just my opinion again, maybe they'll have 2 or 3 QSOs that issue stablecoins that credit unions use, kind of like Zelle, right?
Mm-hmm.
It's their network, it's the credit union network. And they all agree that they're going to allow their members they're going to accept those for other credit union members. Okay. However, what if their member wants to send money to Chase? Does that mean they can't? No. Or what if their member wants to accept money from Chase? Does that mean they can't? No. So you just have to make sure that the provider that you're utilizing to provide the stable coins that your members are using to spend has interoperability.
That's what I was gonna, yeah, that was the next question for sure. Because if there's 5,000, hopefully they work together a little bit.
Right. So,
Um,
but that's where I think that consolidation is going to happen. 5,000 won't survive, but I think everybody will try to hurry up and get into the race at the beginning, and then it'll consolidate down to, a dozen or I don't know, however many.
yeah. All righty. So, well, this has been a lot. Thank you for your expertise and your time today. I appreciate it. I'm going to give you the final word. What would you like to leave our credit union audience with?
Credit unions, please, please, our natural state is to wait. And I'm telling you, you don't need to implement something in the next year, but by 2 years, you better have a plan. So your members are going to be demanding this. They're already buying cryptocurrency. That gambling thing we talked about, I promise you, your members are already doing. Look at your data. Look at how much is going out to digital asset exchanges. It's leaving. It's also going out to Venmo and Cash App and Zelle and all of these other things, and it's not coming back. And so have a payment strategy that includes digital assets. Please, please, and do it in 2026. I beg you.
Thank you so much. Really appreciate it. Enjoy your weekend, Becky.
Thank you. You too, Sarah.